Well, a look at the Asian markets. They're trading in positive terrain. They've started off on a good note, and that's after we saw some good news coming by on Wall Street. The Dow ended higher by about 250 points. And then the directional positives that are coming in from the US-China trade talks, which extend into an unscheduled third day. The investors are watching out for developments on a possible agreement. Remember, last evening, Donald Trump did tweet saying that talks with China are going very well. All eyes now will be on Trump's border wall speech, which starts in about 30 minutes from now. We will be dipping into that on CNBC TV 18. The Nikkei sitting with a gain of about 1%. The dollar-yen not much changed from yesterday, but remember it has weakened from levels seen in the previous week to around 106, sub that as well. The Korean index rebounding from yesterday's move, about 1.5% in the green terrain. We have the Straits as well as the Taiwanese indices sitting with positive gains. Most importantly for us, though, the SGX Nifty indicates a start which could be above the 10,900 mark, and that is very important, primarily because also keep an eye out on crude prices. We have the crude prices which have inched marginally higher, closer to the $58, $59 per barrel mark.
Okay, taking that point forward regarding the US-China trade negotiations between the world's two largest economies. Now, they have been extended into an unscheduled third day. We have got the tweet from President Donald Trump yesterday that the talks are going well, as well as there were reports in the US suggesting that the differences are narrowing. CNBC's Eunice Yoon reports on the latest developments as the markets believe that there is real progress being made in these talks.
It appears that there is some progress being made by the U.S. and Chinese negotiators on greater access to the Chinese markets and also more purchases of American farm and energy products by the Chinese. Both sides also appear to believe that enough is getting done to set the stage for higher level discussions at a cabinet level, possibly later this month in Washington. In fact, President Trump tweeted last night that talks with China are going very well, but they still are at odds over some of the more tougher long-term structural issues that have been very important to the more hawkish Trade Representative's office led by Bob Lighthizer, who is also leading this delegation. Those issues involve domestic companies being subsidized by the Chinese state, forced technology transfers, also intellectual property rights protections. And one of the big challenges that face the Americans is how to get the Chinese to really commit to some of the pledges that they've made, when we've seen in the past, from at least the American perspective, Beijing perhaps looking for ways to not adhere to the spirit of an agreement, even if it adheres to the letter of one. So one of the ideas that has been floated by the Americans is to see whether or not they can maintain the tariffs to continue to pressure China, or possibly reimpose tariffs if the Chinese end up breaching the agreement. However, it's just based on the way that China has been speaking in the past several months. It seems difficult to believe that the Chinese would agree to this, just because they've said repeatedly that they don't want to negotiate with a gun to their head.
Well, and the reaction of this was also seen on Wall Street, wherein the stocks closed higher for a third straight session, as optimism over US-China trade talks really boosted the sentiment. Now, the Dow Jones gained around 250 points, posting its first three-day winning streak since late November. The S&P 500 rose almost 1% as real estate and communication services sector outperformed, and the Nasdaq Composite as well climbed over 1%. Remember, all this ahead of the all-important speech coming in from President Donald Trump on the border wall. CNBC's Deirdre Bosa gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks finishing in the green today, the Dow adding 256 points, the S&P up 24, and the Nasdaq higher by 73 points. Jobs openings declining to about 6.9 million in November, but vacancies still outpacing the number of workers available to fill them by 800,000. This according to Labor Department data. Meanwhile, a bankruptcy judge giving Sears chairman Eddie Lampert another chance to buy the department store out of bankruptcy. This after Sears this morning planned to announce it would liquidate after 126 years in business. Eddie Lampert's $4.4 billion bid to save the company was deemed insufficient by Sears advisors. Now Lampert's hedge fund, ESL, will be required to pay a $120 million deposit by 4 p.m. on Wednesday, followed by an auction on January 14th to compare Lampert's offer against others by liquidators. And Google announcing plans for a new 584,000 square foot campus in Los Angeles. This will be Google's latest office expansion since they announced a $1 billion investment into a new campus in New York City just last month.
All right, Apple's new campus in LA, that is something that visitors will definitely be keeping an eye out on. But let's move on that note. Here's also some opinion coming in on the US markets from Jeremy Sagel of Wharton School on the US economy and markets in 2019.
It's a game changer that the 10-year, you know, the rising 10-year rate, which was a constant threat to the market last year, I mean, has collapsed. It's under 2 3/4. If you'd have told me last fall, you know, we'd have a 10-year under 2 3/4, I'd say, you know, what are you smoking? I don't think anyone predicted that. So I think that's a real positive for the markets, and I think that with the price-earnings ratio as it is, I think we're going to have a good year in stocks. I've been on record saying I think the December hike that the Fed made was a mistake. I don't think it's a deadly mistake. I think that long-term interest rates are more important to investors, portfolio allocators. You're deciding stocks are long-term assets, so they're going to compete more with the bonds than with the Treasury bills. Yeah, I do think it got flatter, and I think this means a slowdown. I think it's going to be like 2016. We had that slowdown in the economy, and it was a pause that refreshed. And I'll tell you, that labor market report on Friday, a blockbuster. You couldn't hope for anything better.
Okay, so stocks might do well this year, but on to some more market opinion on that note. Mohammad El-Arian says an economic slowdown doesn't mean recession or financial crisis in the cards. Speaking to CNBC, he says there may be small pockets of economic weakness. Overall, the economy is doing well.
It's hard to find any systemic weakness in the U.S. economy. Yes, there may be small pockets, but overall the economy is doing well. And you saw this from the employment report most recently. I worry about China. And secondly, let's not forget how much risk-taking happened during the period of ample and predictable liquidity from central banks. So if you're looking at the market as a whole, it's a global concept, not just a U.S. concept, and we have to deal with a weaker global economy, and we have to deal with the fact that the technicals can easily turn negative. What happened in 2008 was very special. It's because the banking system was at risk, and the minute you put the banking system at risk, you put the payments and settlement system at risk. We're not there. The concept that a slowdown in the U.S. means recession or means a financial crisis, that's just wrong.
Right, and in Europe, we saw the markets hitting a 3-week high. They closed higher on the back of hopes of a trade deal coming in between the world's 2 largest economies, US as well as China. And in terms of individual stocks, Carrefour was the one that did fairly well, taking the French index higher.
Okay, on that note, we'll slip into a short break. All the cues and news you need to know for trade this morning on the other side of the short break.